What is going on, guys? It's Thomas here, and today I'll be discussing my top 5 financial tips going into 2020. Now, 2020 has already started off with a bang. We've got borders closed, we've got countries putting their whole population into isolation, we've got interest rates at an all-time low, we've got the fastest ever bear market happening in under 20 days. So how should we be dealing with this, and how should we make sure that our financial situation isn't affected drastically by the changes in the market? Now, it's a quick overview of market psychology just to get an understanding as to why we are in the position we are today. So markets and the movement of markets are predicted by the people involved. So there's more buyers than sellers, and the market obviously goes up. And if there's more sellers than buyers, then the market drops. And the actions of people in general are determined by either avoiding fear or moving towards pleasure. And what we've seen at the moment is a perfect example of the population and the majority avoiding fear and avoiding the unknown, which is what's happening with the virus that we have in the world at the moment. And people are scared. So as the majority is scared, they're selling out of their assets, and we're seeing a major shift in the market. Over 20% in 20 days is pretty crazy. But you have to take a step back from the situation and really understand the financial perspective of what is happening at the moment. There isn't really any financial reasoning as to why we've seen such a major sell-off over the last couple of weeks. We've got interest rates at an all-time low. We've got GDP increasing year by year. We've had the longest ever bull market. And the virus itself isn't a deadly disease. It's got a 97% recovery rate. But what has occurred is what we've seen in what's called as the butterfly effect. So we'll give you a quick example. So say the government stops events from holding events, so the event place has to cancel, which means they've had to have a refund on their location that they've booked out and for their speakers. So the speakers would then cancel the hotels and they're playing their flights. So then obviously the flight companies are losing money, the hotels are losing money, the taxi driver that was going to drive him to the event and from the airport's also losing money. And it's just a flow-on effect to everyone else, and that's what we're seeing today. We've seen majority of sectors across the whole globe being affected by this virus and by the economic shutdown worldwide. But we really need to understand that these are the times to buy. Be fearful when others are greedy, and greedy when others are fearful. And people are scared at the moment, and there's awesome opportunities out there to make the most bang for your buck. And now I'll go through my top 5 tips to make sure you can make the most during this situation. My first financial tip going into 2020 is to ensure that you have an emergency fund. Now, an emergency fund is a savings account which is only to be touched during financial distress and such situations as losing your job, unexpected medical expenses, or unexpected repairs. It's extremely important to make sure that you do have an emergency fund put away for times like we're going to at the moment, just to make sure if you do have any expenses that are extremely important that do come up, you have a savings account there ready to pay for those expenses. Now, I typically recommend that you budget between 3 and 6 months of your monthly expenses to use for your emergency fund. Now, when I'm talking about your monthly expenses, I'm not talking about your nights out, your fine dining dinners, or you eating out. I'm talking about your core expenses, so anything that's necessary for you to survive. The best way to work this out is to, for a month, just write down any expenses that you have, subtract any of those expenses which would have been luxuries, and there you've got your core monthly expenses. Now, times that by 3 or 6, just depending on your financial situation, and that's what you should put away for an emergency fund. So just leave it in a high interest savings account to the side, just in case a rainy day happens. My second financial tip is to not be afraid to buy during a falling market. Now, like I said before, there's multiple famous quotes that go along the lines of be fearful when others are greedy and greedy when others are fearful. Now is a perfect time to buy. This is where all the money's made. It's like the stock market's on a 30% discount. At the end of the day, the market is going to continue increasing, and humanity is going to improve, technology is going to improve, innovation is going to happen, and in the long run, the economy will continue to grow. Now, just because we're down 30% at the moment doesn't mean that we're going to continue to keep falling. Over the whole of humanity and the entire time the stock market's been around, it's always been increasing on the long run. So just take it as if the market is at a 30% discount at the moment. When you go to the shops and you see items at 30% off, you buy more than what you normally would. So why should it be any different when it comes to investing? So don't be afraid to buy in a falling market. In a falling market is where all the money's made. It's where the smart investors invest. Now, my third financial tip is to make investing a habit. Make it an essential part of your financial blueprint. You should have automatic investment plans just as you should have automatic savings plans. It should be something you continue to do to ensure that you're increasing your wealth. Now, when I'm talking about investing, you don't have to start with massive amounts of money. You can just be a little bit consistently. So it's just start with putting a couple of dollars away every month into an account and invest your money somewhere. It's better than sitting in a bank account, especially at the moment with interest rates so low. And my recommendations is don't go spending hundreds of hours reading up on stocks. Make it simple. Invest in what's called an index fund. Now, an index fund is basically just a pool of the best companies in a particular stock market. So example, the S&P 500 index fund is the top 500 companies in America. And that continues to change, and the basket and the index fund is continued to be upgraded and updated depending on the top 500 companies. And it's a matter of clicking a button to purchase. There's no thought that needs to go into it. It's averaged an 8% annual growth since its inception over 50 years ago. And most of the time, you're better off going with the index fund than you are spending hundreds of hours investing and researching stocks, unless it is something that you enjoy, obviously. So start by buying index funds. And I've also done a quick example just to show you the effect and the money that could have been made even over the last 20 years with the massive fall in the stock market that we've currently had. So say if you were to buy the Vanguard S&P 500 index fund and you were to put $100 away every month since the year 2000, you would have made over $50,000 with an annual return of over 7%. Now that's with the massive fallout that we've seen currently. Even after the fact, we've still had a 7% growth. You've doubled your money. So that's why it's extremely important to make sure that you are consistent with your investments and to make sure that you are consistently investing and putting your money into safer assets. Now, my fourth financial tip is to reevaluate your investment portfolio. Now, if you are having sleepless nights due to the current fallout that we've had, maybe you're too geared towards stocks. It's extremely important to be diversified to make sure that your risk level in your investments is adequate to your risk tolerance. So if you aren't a very risky person and you're freaking out over the massive fallout that we've had, maybe it's better off gearing your portfolio more towards bonds. Now, like I always say, investing is always a long-term play. However, if issues and recessions and bear markets are having a massive effect on your well-being, then maybe it isn't the right idea to be investing heavily into the stock market. As you get older, you should typically be pulling more money and wealth out of shares and out of stocks and putting them into less risky assets such as bonds. So maybe just double check to see whether your portfolio is geared correctly to your current risk tolerance. Now, my last financial tip is to ensure that you have multiple income streams. Now, the average millionaire has 7 different income streams. Now, that may be a lot, but I've broken down a couple of the main focused income streams, which are obviously salary, real estate investments, rental returns, stock returns and dividends, capital gains, online businesses or hobby businesses, royalties, books, trading. Now, obviously, a lot of people do have a lot of extra time at the moment with all the isolation happening around the world. So this could be a perfect time for you to sit down and discover what could be your next income stream. Is trading a passion that you'd like to get involved in? Did you always want to write a book? Do you have some sort of hobby business that you could start up on the side, or an online business that you've been thinking about trying out? Or do you want to go buy a property? Like I said earlier, this is the perfect time to buy assets. It's the perfect time to go buy a real estate property. Owners are scared of what's going to happen with the market. There's awesome opportunities out there at the moment. If you do want to go buy shares and dollar cost average in and buying on the way down, then go and do that. But you should ensure that you have multiple streams of income coming in just to protect yourself from issues like what's happening today. Now that's it, guys. Thank you so much for tuning in. There's my top 5 financial tips going into 2020. If you have any questions, feel free to comment down below. Otherwise, please make sure to smash that like button, and I look forward to seeing you next time.